Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, let's take a look now on the gold market. So you could see that gold is not stopping to surprise us. If in the beginning of the week and the weekend we barely suggested that market should reach, maybe will reach, maybe not, near standing COP target that was around 20.95, but right on the Monday morning market has formed this huge spike up, complete directly the OP 21.30 and collapsed. So in fact, this completion of the OP and the following retracement was very fast, but in general, it doesn't break the normal price behavior of the market when it completes some target and shows the pullback after this target has been done. So in this case, it was just has happened in some kind of the ultimate manner. So it's just in one day has happened both things. So there's lots of talks right now what the background stands behind this. But I suspect that this is mostly economical reasons, just because we also see the strength of the United States dollar. If it will be political, United States dollar probably also should keep dropping. It's just because if some relief comes on the geopolitical stage, and the market should contract their positions in the safe haven assets, especially as market widely anticipates starting of the rate cutting from the Fed as early as in the March. Since this action that we see here doesn't correspond to the idea of the geopolitical relief, it probably has purely economical reasons. One of the things that might be supposed is that maybe market currently review its major opinion concerning soon rate cut from the Fed, and maybe currently the overall idea changing on a more extended time before first rate cut will follow. This is first reason. Second reason is some kind of the technical reason that we have discussed in weekly report and also shared with you in our Telegram channel, that currently demand for gold stands so strong, physical demand, that it's becoming difficult for major banks to control this market with the paper short position that markets are hold on the futures, Chicago Mercantile Exchange and options market, because more and more contracts come to the physical delivery, and in the current circumstances you could print the money and take the short positions on the gold, but you will have to deliver, and that explains why the storages of the COMEX exchange, sorry, not the Chicago Mercantile, the COMEX exchange, so it's coming to dropping significantly. And this brings some unexpected and really wide fluctuations on the markets, leading to the huge volatility, so market becoming unstable. This is also might be the reason, so we will see. But things that we see today is actually absolutely does not break the overall technical picture. Yes, they're a bit too sharp, fast, but in general they're coming right between the points that we have specified. Hitting the OP, which has been specified, drop to the 30% support, it's absolutely normal. So since market wasn't overbought and has formed yesterday few bearish signals just in one session, so we have huge bearish reversal candle, market closed below the lows, we have huge bearish engulfing. All this stuff suggests that probably we should get some deeper retracement. But first, take a look that market stands very close to the confidence support that we have on the daily chart. It did not ever sold as euro currency, but still it's very close. It's 2012 area, 2016. It means that for position taking, we should better wait for some bounce, which is also very often happens when we are dealing with the engulfing patterns. So as on the euro currency, we're waiting for a bounce, but for a bit different reason. On the gold market could happen the same. So on the hourly chart, actual market drop has precisely to the 2020 area. Actually, on the fall time frame chart, if you remember, we talked about this level, although we had some doubts that this will happen because level seemed too deep. But you can see gold brings surprises once again. So the collapse has happened precisely almost to the previous top. So market right now, we could say, retesting of this area. From that standpoint, we could consider minor pullback. Currently, it might be in the shape of the ABCD, but maybe it will happen slightly from the lower level a bit later, because market hasn't quite reached confluence yet, and probably it might happen when the market will touch it. So once the confluence will be touched, then probably pullback could follow. But in general, idea stands as follows. So we're just watching for a pullback to one of the levels. 30% level probably we could skip. It's not very interesting to us, but the confluence around 2065, which is also the XOP, at least based on this ABCD pattern. Maybe later we will get some different pattern, but for now, the confluence area seems one that might be interesting to consider possible taking the short position. Because when you're dealing with the engulfings, pullback very often happens to the 30%, and the confluence area is a bit stronger than just the usual fib level. So from that standpoint, 2065 area seems interesting. And just in the end of the report, keeping the topic of the ultimate patterns, since we're getting ultimate action, some extraordinary action on the daily, keep watching for MACD. For example, if this action is possible, I do not see other reasons. For example, if market will form the bullish stop grabber right here, I do not see reasons why we should exclude the chance that market will return it back up and take out of this stop if the grabber will be formed. As you understand, chances may be not really significant for that, but who could predict that chances on this type of action on Monday is also significant. So on the gold market right now, we should be ready for any performance. So that's towards what we have on the gold. Just the bottom line, currently we're not taking the new short position. We need to see it for the bounce because market stands very close to the support area. But based on this pattern that we have, most likely in the most cases when market forms something like this, in 90% cases it has the continuation. So usually it takes the compounding shape on the lower time frames in the way of some kind of the ABCD pattern. So retracement might be a bit deeper here.